Stock futures, they are sinking this morning. The global sell-off intensifies here as the Dow futures are plunging more than 1,000 points, more than 1,200 points right now, and the Nasdaq is set for its biggest opening drop in more than 4 years here. So let's get to it with the three things that you need to know to start your trading day. Yahoo Finance's Jared Blickfried, Brian Sazi, and Josh Shaver have more.
That's right. Stock futures are in the red with the Nasdaq leading losses amid a global sell-off. Softer than expected jobs report is exacerbating concerns over the health of the U.S. economy. U.S. recession fears sparking the VIX volatility index to hit its highest level in 4 years. Meanwhile, Japan's Nikkei is plunging. You can see it down almost 12% there, marking its worst day since the 1987 Black Monday crash on Wall Street.
Apple and Nvidia are leading the declines on the Nasdaq as the tech sell-off spreads across Wall Street. Shares of market darling Nvidia are being pounded in the pre-market down about 13%. The drawdown of the Nasdaq has sent the tech index into a correction, leaving many investors wondering if it's time to sift through the carnage for buying opportunities.
And crypto isn't safe from the global sell-off either. The price of Bitcoin falling more than 15% this morning. This marks the cryptocurrency's worst price decline since 2021. Exchange platforms like Coinbase are taking a hit too. That stock down more than 16% in pre-market trading. Crypto miners also seeing double-digit losses in the pre-market.
And then you also had more economic data in that worse than expected jobs report, which kind of triggered for this market the mindset of bad news might start to mean bad news if this Fed is too late to cut. Here's what we're also going to take a look at. The VIX up on your screen, and that's bad news right now. The VIX spiking and hitting a level at this marker, a level that is analogous with the COVID pandemic and the heights of the COVID pandemic. And this is, of course, what the street knows as the fear gauge index. And taking a look at just some of those levels here, the biggest daily jump since February 2018, that was back when we were looking at this at about 50, 55. And so now we're at 63. We'll see exactly where that is compared to. But ultimately, let's also zero in on some of the underperformers falling below some key metrics. And one of the key metrics that I'm tracking here this morning, the 200-day moving average. This, of course, is one of the simplest ways to get a comparison of the average price over a specified period and kind of plotted over time. But ultimately, crossing below this 200-day moving average, you've got names like Amazon, AMD, ASML, Salesforce, and Chevron. What's notable about that is that some of these names that are starting to hit below those 200-day moving averages or crossing into them are some of the most actively traded names on the street, crossing below the 50-day moving average here, a shorter time span. One of the ones that I'm tracking here, or at least several of them, we've got names like Broadcom, Costco, Google, JP Morgan, Microsoft, Netflix, Nvidia, and Tesla. And here's what's notable about some of those names. For Microsoft and Tesla, at the start of today's trading activity, they may well cross below those 200-day moving averages. That's just how close they were to them. So let's dig further into this sell-off with Yahoo Finance Executive Editor Brian Sazi.
On the street right now, that jobs report on Friday really badly missed consensus forecasts, and now there's this view, at least for today, that is, of course, market narratives change literally second by second. There's a concern that the Fed should have started cutting rates already if growth is going to slow down. So something to watch there as well. That's the narrative, at least today, amongst a lot of folks I'm talking to in the street. Number two, when Warren Buffett dumps stocks, bears growl. We got that news over the weekend that Warren Buffett continued to sell shares of Apple. Lightning is a load on stocks and more generally. There are really a legion of followers of Warren Buffett's various investing disciplines out there in the world of markets. So when you see Warren Buffett selling stocks at a time where stocks were already off their highs, some people use that as a red flag to go out there and sell some more. And then last but not least here is, where is all that AI chat money in tech earnings? We've seen Microsoft, Alphabet, you name it. I go back to Salesforce a couple weeks ago as well. We're not seeing, I think, a lot of these big cap tech companies justify their valuations based on what they're seeing in all things AI. I was talking to a couple investor relations people at one prominent tech company late last week, and they readily acknowledge, guys, they're not making large sums of money on AI, but is it a different story 10 years from now? Sure, absolutely. But in this market, today at least, investors don't care about what's going to happen 10 years.